Well, you know you're a chart nerd when you get excited for monthly charts, end of month charts, and they're telling us a lot. Let's get to it. So here's the futures market. And the way that I always look at hammers at the top of a chart is very bullish. I'm just going to come out and say it and start there. Anytime I have something like this, I like if it was a dragonfly, it'd be even better. Quite frankly, because it would show that the battle is there. I constantly look at these at the top of a chart and think about a slingshot and the fact that you're down here and then you're pulling this back and then you're setting up. And most people will look at this and say, but this and that, and we have this going on and that going on. And I agree with you. I'm only speaking technically. I'm not getting into the macro side of this. I'm not talking about the fundamental side of this. I am just very simply talking about the technical side of this and its inability, despite all the nonsense that we just went through, for this to even make a lower low. As a matter of fact, since the breakout here, we did not make a lower low. Now, everyone will talk about how easy it was to pick this bottom. And of doing this 25 years, there's nothing easy about trading. So if you're looking for the easy video, this is probably not going to be it for you. We deal with reality here. So this is what you're dealing with. And this is where you're at with an all-time closing high on the futures market, the pullback here and what it means. And there is a lot to go over, but we're going to just start with the basics. So here we're just going to look at the monthly and see here on the monthly chart. And I want to clean these off and I just want to pull this back because people will say, well, you're overbought on the monthly. And I'm going to say, thank you very much. You were overbought on the monthly here from September 13th all the way to the 15th, and you stayed overbought for 2 years. Am I not supposed to buy because I'm overbought on the RSI? It's silly. You actually want to buy the most when you're overbought because that's when you're going to get the most move out of it. You just don't want to be there when the party ends. And you can see how these crosses will start to reflect when the party might end because you don't know how long that's going to go on for. Do I see the negative divergence? Yeah. Do I want to wait 7 years for it to kick in? No, I don't. So I have to deal with the hand that I'm dealt, and I'm going to show the monthlies and then go from there, and then we're going to dive into it. If we take a look at NQ, for example, and we look at this, we're already seeing some signs here. Now, here's what I want to say. I'm going to show you some data today that I think is really important for you to pay attention to. A matter of fact, you might want to watch it a couple times to see the point that I'm hammering home because RSP is giving us a really big signal here. And it's a signal that I've only seen 5 times. I didn't do the data. People always say when I do these videos and you're saying 5 times this, 4 times that, I don't care. I look at data. I look at data, guys. You need to be as objective as possible to what's going on. Data does that. Right? Data doesn't lie. You can manipulate it, but it still doesn't lie. But if you see here, right, I don't really want to cross here. That's not going to be groovy if the kids are still saying that. And what you want to watch is, do we get some kind of monthly cross here? I don't use this line. I know a lot of people do. I think of training wheels, but if I get below that 70, it's not going to be groovy. And so I want to watch that. But doesn't that look a little different than what we're seeing in the S&P? To me, it sure does. I'm sure it does to you too. So what we'd want to do with something like that might just be market. And what we should do is just make that a magnet. And for those that are new, welcome. And I do these as most unedited as possible. So you're just going to have to deal with some flubs and you're going to have to deal with a little bit of rambling. So here we are. And then you can see that level. And I want to know if we flip that because that's going to be important to me. Is it a perfect morning star? No, but it'd be a start to get out of what we'll call this wickedness. See that play on words there? So that's definitely something that I want to pay attention to. Where do you see support? You're going to see support right here. And I don't think anybody else would see it any other way that you don't see major support here. Here's your cup. Here's your handle. Here's your breakout. Okay. You kind of see that. I hope you see that, but it's really important. This is a monthly chart and we only get them monthly at the end of the month. Now, if we go look at the RTY, this is even more confusing out of all of them because you get the hammer's red and you couldn't get over the open. And what we keep talking about here is, oh, clearly we're going in the small caps. Now, I'm in the small cap camp. I've been trading small caps. I've been leaning that way because that's where we're supposed to be in the cycle. Am I wrong? I very well could be. And what we're seeing is that open and close of that month, and when we broke down in January 22, there's your break of that bear flag. You can see it right there. We've never come back from that. We just haven't come back from that. You flipped over, it got in there, and you're still fighting this level. So again, this is a level that we'd want to watch on a monthly basis. A little longer term, we're going to start and then drill into this in detail. Really get into some detail today, specifically SMCI and how you can identify trades like that as well. But I want you to focus on this stuff. And of course, your comments are always appreciated. The idea of, hey, we're focusing too much on just day trades. Can you show us how you're looking at swing trades, how you're layering things? We're going going to do some of that today. It's going to be really important for you to watch some of the swing trades long terms and how I'm looking at the world. And you'll get that in a second here. But if we just look at the basics, this is what we have. Now, there's some other outliers here that to me are, as I like to say, absolutely glaring. So if I go here and I look at this on a monthly, I mean, does anyone even think that there's any kind of pullback? Like, there's just nothing out there. The Dow's on fire. There's nothing even close to it. And matter of fact, I'll just tell you right now that if I look at XLI and you're looking at it this way, you have to be asking yourself, like, why am I not in these names, right? The IRs of the world or the Caterpillars of the world. You know, why aren't you buying John Deere? Like that kind of stuff. I don't think they're going to those names. We're going to get into this later in the video. But what I see happening is I see them going into the secondary names that are industrial. I don't see them just chasing these names. We're in the community, like we're buying things like this that we're doing very well with. We're seeing these kinds of names move, and you can just see that. I mean, this thing's on a tear. And again, this goes back to my overbought thesis. Do I not want to buy this from 18 months ago because I'm overbought? No, it would be silly. But if we get back to the diamonds and look at this, I think you're going into the secondary names. So in other words, if you start looking at like ITA, which focuses on aerospace and defense, well, they're breaking out, right? And even the secondary names, I'm going to go off on a tangent like that, like space phone, right? Everyone's upset that space phones just doesn't go straight up. Well, nothing goes straight up. But if you look at this, they're going into that secondary market that could be industrial. They're leaning that way. They're not going into, you know, the charters of the world and saying, I want to be in that space where they're laying cable. They're going into very specific areas of interest. As a matter of fact, there are 40 very specific sectors that if you've watched these videos, I go into all the time and I take a look at. But most important to me is this, RSP. Because this is equal weight. And this equal weight, when we start going into the sectors, is telling you everything. You've encompassed this entire bar. That open and close is above everything. Let me show you the difference here so you can stay with me. Don't go to the light. Stay with me. See how it is right here and how you're flipping? Okay. RSP. Watch. Say it. All right. You can't get any better than that at the top of a chart. And here's what's even better about this from my perspective. There's your break. You're just starting. This is literally just starting. Now, you'll remember what happened back on July 11th. July 11th, we had our first negative reading of CPI month over month. What does that mean to you and why do you care? Because that's when we saw this major shift happen. We talked about it then. If you take a look at the RSP from that date on versus the SPY, and I always find this very helpful to do. We're going to drop that to regular trading so you can see this. And I love looking at relative performance, and I love looking at it in a couple different ways. This is one way that you could look at it and just overlay these charts. Now, from that date on, you will note a major flip that you have not had for some time, where equal weight is continuing to outperform market weight. That would mean, and we know what's in market weight, don't we? We know it's those big 7 names that are underperforming right now. And they're continuing to. I'm going to show you why that might continue and why it might be a really good thing that continues. But what we need to focus on right here is the fact that it did flip. This is what's happening. And now the question becomes, how do we take advantage of it? Now, this was a piece of research from Sentiment Trader, and I thought they did a really good job. So I really wanted to cover this. For me, I can't stress enough how much I like looking at research and just seeing what happened in the past. And then it doesn't always mean that's what's going to happen. But I do think it's important to look at the past and then go, okay, how many times has this happened and what's happened since then? And what that does is it just tells you where you might be in a cycle. For example, here's Sentiment Trader, and this is the person that did the organization that did this rather. This is equal weight. So equal weight, we know, is not SPY, we know it's RSP. Just be aware of that as this goes forward. Again, RSP, really important, just remember that. All right, so here's a 5% pullback. And what they're saying is, out of this 5% pullback, a round trip in only 23 sessions, meaning it took from 5% down to bounce back to where we were 23 days. And their point of this article was, dating back to 57, this was the fastest ever round trip from a pullback. I want to stress that too. There's a lot of people like, oh, I know I should have bought the dip. Really? You have the US Japanese yen that you're having an issue with, is Japan is raising rates for the first time in decades. You have CPI, PPI that you're facing. You have 2 wars on the front right there, and people think we're going into a hard landing. So I always tell people when they see this stuff, you don't beat yourself up. If someone said all this stuff was going to go away in 2 weeks, you would have been like, whatever, boomer. It's just not going to happen. You're not going to get rid of everything in 2 weeks, and that's exactly what happened here. So that's why it took such a short time for this to bounce. But I think it's important to take that little snapshot and then see what's happened in the past when this has happened. Now, we're going to get into a couple what I think are important details. We've only had a couple data points. Equal weight, quickest recoveries from pullback. So what they said is, okay, give us the quickest from the pullback from this time that's happened since 57. And this is what they came up with. 18 days where you were a week later, 20 and where you are, right? And so what this is telling you is how fast that you bounce back. Now, we already know from that bounce where we are, and this is something that's really important for me to just point out there. The fact of getting back as fast as you did to where you were was pretty significant. What really stands out to me, and I want to point this out as someone that does look at a lot of data, this is only 4 signals since 1950, and they're using the quickest recovery pullbacks. If you use a bigger data set, this is going to get skewed. But if you're pulling back to the same level that this pulled back at, it's only happened 5 times. And I know people, don't want to look at stuff like this because it doesn't have statistical significance until you have 30 or more data points. This is what I have. So this is what I have to deal with. And what happened to the sectors is really surprising and fits what's going on. The Z-score to me is really impressive, and we'll get into that and how you should look at a Z-score and how you should read a Z-score when you look at this data. I think that's important. But you don't have a scenario here where a month later you're not higher from this. You just don't. And again, it's one small subset of data, but you don't have anything here where a month later from when this happened, you're down. I think you have to look at this. After that, you're batting 100% on this, which is kind of crazy. But if you extrapolate the data set out to include more, meaning more pullbacks and longer to come back to it, this data set's going to get skewed. And what's going to happen to it is this will come out to like 65, 75%. I'm not going to focus on that because I'm focused on this range, this mean, and this median, and this is all I have. But understand, the larger the data set, that doesn't really, let's just say it's not germane to this, is going to be the issue. And so my point with this is, yes, this is a small data set, but yes, this is all we have. Again, this is not my data, this is Sentiment Trader, but they do a really good job pointing something out here. And you can see what your median return is in that period of time for the RSP. Let's be clear about this. We're not looking at the SPY. And that is something that we have been talking about since July 11th, and that first CPI number that came out. And we'll discuss that in a little more detail in a second. But when we look at this, okay, this is your drawdown, and this is your average gain, which is 22, which is absolutely insane, and this is your mean. What stands out is your Z-score. And why that's important is most people really don't know how to look at a Z-score, and I'm just going to tell you the easiest way for you to look at it. If you know what a standard deviation is, think of a Z-score standard deviation at 0, okay? And then they'll say statistical significance. I think they're going to say plus or minus 2. So what you're doing there is saying if you're at 1 standard deviation, then everything in that standard deviation that goes over it between here and here, I guess I could make these bigger, anything that goes over it between above it 1 standard deviation, all right, and we're going to just equate Z-score with that for now, just to make it simple. It's not exact, but it's going to get you there. So you're going to say from there, that's 1 standard deviation, right? Okay. The second standard deviation would be 95%, meaning that if you're in this range and you're in this range, there's a 95% chance you're going to stay in there. When you get over a 3, you're basically saying there is a 99.7% chance of statistical significance of this event. It's pretty insane that you're there. And that's where you're at with this data. So it's definitely a small scale, sure. But is it something that we should ignore because it's a small scale? No, not at all. I would pay very close attention to this. And what's fascinating is the sectors that are moving are the exact sectors that we've been focused on. Now here they're just very simply showing up how when we get to this percentage line, how did we act, right? Or how are we acting in these particular periods of time? And it's showing you pretty clearly what's happening from when we go to here on those drawdowns to those moves. And it's taking it over a very longer period of time. I think there's some value in looking at this. I don't think there's a tremendous value in looking at this. They're trying to explain the differentiation between this drop here where you just undercut and then what happens as you rally back to flat and the time in which that takes. And they're just highlighting it from 83. I think it's worth showing how this has worked in the past. Do I think it's the be all end all? No. Do I think it's a data point that we should pay attention to? 100%. I'll show you why. Now, this kind of stuff always fascinates me because it's so important for people. So you're like, okay, RSP's doing this after quick recoveries. What does that mean? What you do is then you go and say, well, where are they putting the money? And this is where they're putting the money. They're putting the money into energy, for one, over that course of time. Matter of fact, when this happens, Energy over this period of time never even had a negative correlation. And it gets even more specific. They break it down by percentages, which we'll get to in a second. But then you go here and go, well, look at the financial, which we're about to go through. When you look at the financials and what they're doing, it's absolutely insane. But if you look at energy here and financials, that's kind of a weird combination to move. And you would go, okay, well, what about, the tech names? Look what tech does over this period of time. And what are we seeing happen right now? We're seeing tech go sideways. We're seeing the NASDAQ actually underperform the SPY. This is really important because this shows a major shift. And these kinds of shifts, you don't want to sleep on. And I can't stress it enough. And even when you're looking at the XLI names, there's subsectors like ITA that are doing great. But are we really seeing that boom? No. So should we be focused on energy? Should we be focused on financials and REITs? I do think we should be focused here. I don't know about energy because of the macro data that's going on out there, but that's something else we can discuss. I do think if you look at it from a sector standpoint, it gets even more interesting because what you'll see is during these periods of time, value completely outperforms growth 3-to-1. So while we're out there trying to whack around NVIDIA and try to whack around SMCI, you'll note that your trades to the downside on those names has actually done a lot better than your trades to the upside. And the value trades, I haven't had to worry about at all for the community. We're doing very well with just value trades. They're just rocking and rolling. We'll get to that in a second. But look at this on a percentage basis. So here we are, and what they do is on a percentage basis, they say, okay, tell me about the performance on a percentage basis, meaning up, down, right? That's what they're looking at. And in other words, are we skewed? Was there 1 month on energy that just rocked and rolled? And here's what you'll find. I'm getting a 65 on energy, 65%. So what that's telling me is that I'm not outsized there on the returns, meaning, yeah, there's a chance that it's going to go up and 65% is awesome, but it's not 90. And then you start looking at utilities and going, oh, that's interesting. So utilities are actually outperforming consistently. If you're looking for consistency in this kind of environment, you're looking at utilities, you're looking at communications, which could be because of the dividend. You're looking at REITs, okay? They're all outperforming staples. They're all outperforming on a consistent basis versus the outsized, alpha that you're chasing. So you're going to look at this and go, am I looking for consistency or am I looking for outsized returns? If you're looking for consistency, it's telling you want to buy the REITs, you want to buy utilities, okay? Communications, which is probably your AT&T, Verizon, and their dividend paying names. All right, am I looking for safety and consistency? That's what's holding in here. And on a percentage basis, you can see the defensive names on a consistent basis are doing the best, followed secondary by value names. I wouldn't sleep on this. This is something I'd pay attention to, especially for those that say, I do swing trading, I do long-term trading. This is telling you something. And I think it's pretty clear what it's telling us. So now we've got our data. Whether or not you like that data, it is what it is. I like looking at that data. I find it helpful. What I see here now from July 11th on is this move. Now I have RSP divided by the SPY. And what you're gonna note is just very simply, if we just take this time and we'll go find that specific spot, which will be, we're gonna take it right around, let's go to here. And there we go. We're just going to take from here, right there. And then we're going to lift up and we're going to have to get rid of this magnet. And I told you that you were going to have to deal with some stuff. And there's some of the nonsense right there. So here we go, 930, there, boom. And we can see the outperformance has been 7% at one point. Meaning if you were long the RSP and short the SPY, you'd be up 7% at the height of this over a, 3-week period. Where are you right now? 5%. Okay, so this is very clear that they are buying equal weight. And what you can do with this data is not only look at the outperformance of this, so we could overlay this and then say, okay, well, what if I just bought RSP, right? And of course, that's going to be better. And you can see the RSP performance versus RSP divided by the SPY. But there's the hedge that's on, right? Okay, so then if you overlay this, this gives you the opportunity to take that data that we just looked at and see if that data is playing out in real time. So what you would do is just go to here, and we're going to just drop this back here to as close to that date as we possibly can. And then what we're going to do from there is get a more clear reading. But how are utilities doing from that period? Okay. Well, that's interesting. How are financials doing since that period? And what this is doing is it's building a process for us to understand what's really going on out there. How about real estate investment trust? How about the home builders? Okay, this starts getting clearer and clearer, doesn't it, as to where they're actually putting the money. How about We start looking at regional banks. How about the large banks? Okay. And this starts giving us a picture on where the money's going. So then you could say, well, what about the stocks? How's the stocks doing in comparison to this? Okay, well, there's the stocks. Okay, what about software names? Are they doing better? Okay, no, they're not. Okay, how about the NASDAQ in relation to all of this? So now you have a clear picture from this date. You have all that data to back up what's going on out there, and we're still trading NVIDIA. Do you see the problem? And I'm not going to tell you that I'm going to stop trading NVIDIA, but this is when you have to start looking at this stuff and saying to yourself, what kind of investor am I? What kind of trader am I? Do I actually have a process and a system that is showing me where the inflows of money are going, or am I throwing darts at a board, right? This is a really important concept for people to get. And that's why I like doing this unedited like this. You can always comment below. For those that did reach out, by the way, thinking about comments on the wait list, just make sure you're on it. I am going to get out another batch out, hopefully this weekend, but just be aware of it. I've gotten a lot of emails saying, hey, I didn't get the invitation yet. Just bear with me. And if you're interested, get on the wait list. As I stated, I am going to raise the price. But not for those that are on the wait list. All right, let's go. This is painting a story for us, isn't it? And so when we look at that story, we can either pay attention to it, or we could put our head in the sand and saying, no, it's going to change and this is going to come back. And there's a time to trade what's happening, right? And that's usually the predominant thesis that works. This is what's happening, guys in the general sense. And we can either deal with it and make money, or we could tell it that it's wrong. One will make you happy, one will make you sad. Okay, so I like being happy. So what I want to do here is overlay this and then think about what can we do here to actually profit from this, and I'm going to show you. Now, in front of you is the Fed Watch tool, and I want to explain this. What we have is we have a data set, and that data set is very clearly telling us one thing, right? It's telling us RSP is outperforming, and then we're seeing RSP outperforming, and then we're watching those sectors we just went over outperform. I look at 40 sectors every single day. I actually look at more than that, but there's 40 major ones. What we're seeing is they are going to cut rate. Now, whether you believe they're going to cut rates or not, I don't really care, because the world believes they're going to cut rates. So how do you know this? Okay, here you are at 525, 550. All right. 525, 550, that's the current target rate. And you can go there and you can look at Fed funds or whatever you want. We're going to leave the arrows there, even though they're not. And what we have here is, okay, well, tell us where we're going to be by the end of December, that last rate. All right, there's a 30% chance you're going to be at 450, 475. So you take the high end of that, and that gives you 75 basis points, right? You can see that. Okay, so you take 450 here to 550, that's going to get you 100 basis points in cut. If you take the 525 target to 450, that's going to get you 75. All right, then you come here and you would look here and you have a 44.8% chance of seeing what? 450, okay, to 425. Well, that's going to give you 100 basis points to 125 basis points, depending upon how you look at it. So forget about this for a second, okay? And let's just focus on this and saying, between now and December, there is a 74.8% chance of at least 100 basis. Let's just say that happened, okay? Because there's greater than a coin toss that the world believes that's going to happen. And of course, anything can happen and this can always change. But this is the hand that we're dealt now. And all we can do is play the hand that we're dealt, even if we wanted a better hand. That's all we can do. So who's going to benefit from this? And that's going to tie us directly right back to where we started, into regionals, into large banks, into home builders, into REITs. This is what we're seeing, financials, utilities. They are consistently outperforming. As a matter of fact, since July 11th, the NASDAQ from that point on is down 4%, 4.38%. The SOX is down 11.88%. RSP is up 5%, meaning if you bought RSP and you shorted the NASDAQ, you're up 10% in less than a month. So it's not the market that's the issue. It's the stock selection and sector selection that's the issue. It's an important distinction for people to remember. So it shouldn't be surprising to us when we see names like XLRE forming these flags and breaking out as everyone keeps telling us commercial real estate's going to zero, right? And we can start seeing these multi-year breakouts. Now we can either participate in these with names that you think are going to benefit. For example, I like a lot of the New York office space because I keep hearing New York's dead. and it doesn't really seem to be the case, does it? Or you can go out there and look for other areas of interest. Some people like playing the HPPs, waiting for them to figure out what they're going to be when they grow up, or they'll play BDN, the secondary market out of Philly, but they also have spaces in. They started traveling more to Texas and going down there. So there's a lot of different ways to play the space. I know what areas I like. I think you should focus on the areas that you like. What this is it's an interest rate sensitive name play that's going to benefit from the value growth that we just went over as well, if you remember that subsector. And if you look at how growth divided by value is acting right now, it's acting god awful. So if I turn this into a line, just to put it in perspective, they are selling growth and they are buying value. It doesn't matter whether or not you think they are. They are. What date have they started buying value and selling growth? Because if you flip this, it would be the exact opposite. Okay, they started right around July, what? 10th, 11th? What a coincidence. Look at the rally and the bounce that just failed. Another amazing coincidence. Take the level, we'll call it a coincidence. And you can overlay this chart with the SPY Q, for example, and you're going to see something very similar. Okay, where did this start and when did the SPY start outperforming the Qs? Right around July 11th. Say it with me. So if you see this, you shouldn't be shocked that people are not buying the NASDAQ. Look, if the NASDAQ's not going to outperform the SPY, just think about it like this. If the NASDAQ's not going to outperform the SPY, if it's not going to, why are you buying the NASDAQ? Right? Just think about it. You have more risk with the NASDAQ per unit, right? You just do. Everybody knows that. So why would you go out there and take more risk to not be paid for it? It makes absolute zero sense. And so you have to keep that and take that into account. That leads you to going, okay, well, what are the higher beta names that are going to move? Well, all you have to do is just follow the money, right? So JP Morgan, nobody wanted to buy it, and everybody will remember what happened here when he said, oh, my stock's price is too high. You guys should be selling my stock. And then it came out that JP Morgan instituted a huge buyback and everyone sold their stock to him. And now he's up 10% on his investment. But sure, sell the stock when he tells you that the stock price is too high. If you take a look at JP Morgan's of the world and the Goldman Sachs's of the world, they're setting up, right? They're all setting up to break out and they all fit into that KBE category that we talked about. But there's subsectors here too. For example, like IBKR would be a subsector. Okay, why IBKR? Because people aren't understanding how companies like this are just killing it on margin. Have you noticed that your margin interest has been up over the past 12 months? Companies like IBKR kill it on that kind of business. Okay, they do. So does Schwab. But specifically IBKR because they cater to a higher end clientele. Their average balance, I think, is like 300,000 or 400,000, and they do exceptionally well with that. So that margin interest, because you think about it this way, guys, if Fed funds is up, right, and you're at levels that you haven't been for a period of time, then all of a sudden you're just going to start printing money. And that's what they've been doing for 12 months. And now it's just coming to fruition. So names like IBKR, those kinds of names, they're probably going to push, right? Other names that we bought in the community like MO, it's been a no-brainer. Every single day that we're in it, I think it goes up like 20 cents or 30 cents. Is it lighting the world on fire? No. Is it exciting? No. If you want excitement, go to the circus. You're here to make money, right? This makes money. This just keeps grinding higher. BTI, I think we're getting 8%. And while we're doing that every day, it's going up. So there's these kinds of trades, those interest rate bearing trades that make sense. Does that mean that these are the only names? No, there's these high beta names that are going to do exceptionally well. I'm going to go through two of them in a second. What do you do with tech? Tech you trade. And I'm not saying that tech's down and it's never coming back. Not at all. A matter of fact, I've been trading tech pretty aggressively this week. We had a really good short in SMCI I'm going to walk you through right now. I want you to understand the nuances of this and what exactly transpired here, specifically about how to start building up fundamental triggers. Take a look at this. Okay, for those of you that have been watching for some time, you'll note I finally fixed the camera, so I'm looking at it and not up. I know, I'm a boomer. It is what it is. But I want to go through this before we go any further about this trade, because this is a really important trade because it encompasses fundamental analysis, and I want to just kind of show you a real quick trick so that you can figure this stuff out. But I just want to go through the details first. Everybody knows roughly what this account started with. If you've been watching for some time, $1.70 roughly. That which gets measured gets result. And I really want to hammer that out. I don't care what you're measuring. If you measure anything, you get more results with it. I don't care if you use TradeZilla. I like these guys because it just gives me everything at my fingertips. It's real quick. I have no affiliation with them. There's no affiliation, like nothing like that. I just like the product and I think it's a good product. But it doesn't matter to me which one of these you use. It doesn't matter to me if you go old school and you journal and write your thoughts down at the end of the day. I will tell you that if you do that, you're going to get further. And the whole purpose of me doing these videos is information education. So this is where we're at. I purposely showed how we had this drawdown or just sideways period. And also, this is one account. This is not how I trade all my accounts, and it's certainly a run and gun, very aggressive account. Trade expectancy. Every time I touch the computer, what do I expect to make? Profit factor speaks for itself. Win ratio, year to date, I'm at 54%. Would I like to be higher? Yeah. I'm also still waiting for Giselle to call. What I want, what's happening are two different things. This is where I'm at. And then I have the win at 1.5. So I want to go through that before I show the trade. And it's really important to get that because you're going to have your ups and downs and you have to realize that. But let's get to it. Now, in front of you is a trade that in the community we just nailed. We entered pre-market, scaling out, scaling out, scaling out. I want to take a second to walk through this live and how we did it, but step-by-step live. Thursday's video, which I'll link at the end, actually had the actual trade where I showed the trade live. I'm not going to go through all that again. What I want to do is show how we were able to arrive that this was an outright short, and then how we got out of it, and then how we actually pressed our bet into it. There's some pretty important concepts in here, and it's really important for me that you understand how you can learn to do this. Now, we're all aware of the news, or should be aware of the news. Super microcomputer delay 10K filing. Now, we all know Hindenburg came out and said it's a zero, it's the end of the world, fraud, blah, 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 right? And they nailed it. They nailed parts of this. We can at least agree to that, because I don't think they would have done this had Hindenburg not issued that. So 24 hours later, they come out and they say, oh, we have an issue with their 10K. What I personally think happened here was Hindenburg issues a report, the lawyers get a phone call, and then the lawyers look at everything and say, you need to delay, period. You need to get ahead of this. Is there an issue? And clearly there was an issue about some kind of recognition. Now, later on Friday at the close, they've come out and said, there's nothing material wrong. We're going to discuss that later. But for now, understand what the issue is. And this is really important because once you know what the actual issue, underlying issue is, you can dispel all your thoughts about it and Hindenburg or whoever. And you just go, okay, what happens to corporations when they delay their 10K filing? And that becomes a fundamental issue. And for those that know, we have a macro, fundamental, and technical way that we look at the world, which I refer to as what, who, and when, right? And that becomes our stool, and then they make our building blocks for how we're going to trade. In this case, this is a fundamental issue, which is a micro issue dealing with one specific company. Now, I'm going to explain why I'm going over that so much. You need to identify what the catalyst is, because once you identify what the catalyst is, you can then replicate it over and over again. So I don't care if you write it down in your journal or what you do, but it needs to be someplace you can collate it. So they have custom tags here, mistakes, setups, etc. What your job is as a trader is to look for patterns and then replicate those patterns. You can't do it unless you know what it is. So you're not saying, oh, it's a 1 minute, orb breakdown, opening range breakdown, pre-market on negative news. Specificity, devil's in the details. They delayed their 10K. What does that mean? It means nobody can rely on the earnings or revenues that's been out for the past, let's say 12 months to make it simple, but certainly since they came out and pre-announced. You can't rely on it anymore. So that should go somewhere where you can sort, and that way when it happens over and over and over again, you have a body of work that you can go back to. This is a really important concept because it builds that muscle that lets you know, oh, it's one of these, and if it's this, then I should do this. And that's what you're looking for. You're looking for those triggers and to get faster. And the only way to get faster is that confidence that you know what it is. And it comes from repetition. Now, once that hits, I execute the trade and I put the trade on. And the reason that I do it that way is because I know that I need to get in as fast as humanly possible. Now, this is really important as well. Once it transpired, I know what it is because I've done this for a little bit of time. So I just go in the community and I'm just like, I'm short it if you want. It's toast. I'm not trying to beat around the bush. It can always bounce and you'll see how we respond to that. But we have to understand that when this happens, you can't rely on their earnings, period, revenue. You can get mad at me all you want, but you can't. They're telling you that there's an issue in the way that they booked something and therefore it needs to be misstated. So therefore, no one's going to be able to rely on it. No institution's going to go near it. And after you see this a couple times and you had a body of work of it, you would be able to act faster and faster, hence creating tags or notes so that you can always go back to it. Now, once that's done, all we're doing is just watching the setup over and over again. That's all we want to do there. We now have flipped into the when, right? So the when becomes the technicals now. So as we're trading this, then we can actually make this bigger. As we're trading this, all we're doing is just watching and you're forming a flag. And the next thing we're doing is just looking and saying, okay, well, how are you going to react off the open? So your trade's in, and all you're doing now is just letting this build. And as you're letting it build, we know the next event is going to be the open, and we want to see how it responds. What I like to do with these trades is immediately get out when I can. So in other words, on that bar, I'm pulling money out immediately because I don't know if they're going to rip it back up or not. So in the first move down, I want to go on that assumption. And then once you do that, you're just letting the rest go. Once we're live in the community, I'm no longer doing anything with the typing. John starts doing it or someone else will help along, but I can't do both. What we'll see here is just current notes on what I'm doing with it. I want to watch it closely. I want to pay attention to the trade. I know what is happening. I know who it's happening to, and I know when. So in other words, I have all those steps locked out in my head, and I have my levels marked off. But what you're doing here is, I want to just be clear about this. So SM will bounce and then fall apart. Watch 480. I think we'll get there. So I have my targets and I'm setting them up. And then you can see into that spike. That's why I like using these timestamps. You can see everything and the dates. Try to hold there. 480 will bounce a bit. They're taking it down as well. There's no interest in shorting there. Apple was ripping. If 480, then we're looking at 460. I bought some Apple. You can consider the 450 puts. You're going to see a put trade here as well in a second. Now, what we're doing, let's fire this back up, is we're just watching and we're just waiting. That's all we're doing. Let's blow this thing up. And I'm going to have to do this unedited, because you can kind of tell that that's what's happening. And I'm just watching. And all I want to do is wait. And I'm waiting for it to tell me that it's going to do something. And right now, it's not telling me anything. But what you might do is start marking off these levels. Now, you see this flip right here and how you go over? All we're doing is just pulling money out when that happens, because I don't know if we're going to bounce from here to here and then up again. And when you're trading these kinds of names, you really want to watch these levels. It's very important. As we're pulling money out, what we're doing too is we're just looking for other opportunities. So SMCI 470 puts. I should state this trade is not in that other trading account. I did this trade in another trading account that's more germane to speculative option trades. They are $18. I might not pay up. I paid up. I had no intention of going long this. I was trying to be really clear about that. Like this thing's a pig. You need to stay away from it. And I'm just telling you what I'm doing with the puts. But when they got to 40, we started like trimming. Once that 450 flipped, so you're going to want to watch that 450 level. That's where we trim the stock. And this is really important to get, because that becomes a demarcation line. We're going to fire this back up, and I want to show you that. Get it together, Boomer. There it is. All right. What we're doing now is we're marking off these demarcation lines. If you go and measure this bar on ATR, average true range, you'll find out that that's over 1x. They become places of interest. You might want to remember that, okay? Anything over 1x, that's a bullish engulfing. You're marking that off. You, of course, have levels all over here that we're watching as well. But for time's sake, we're not going to get into all that. What we're going to do is just watch how it's acting and then see if it's telling us anything else. While this is going on, we're pulling money out and we're setting up for the next trade. Here, take a look. And this is, again, a really important concept. So SMCI is hitting lows. I think they're trying to shake people out of NVIDIA, but those puts went to 47. Okay. The stock is dropping, but the puts are not going up in value. So what does that mean? That means we have a stock that is dropping, but the puts are not going up. That is telling you that you're getting exhausted and that you have some kind of bounce. It doesn't mean that it's just going to miraculously bounce, but it might just go sideways and start bleeding you out. Remember, the speed in which you drop when you're in options is your friend. It also is your friend with shorts, because you don't want to be in a position where you're there for a big bounce up. But whenever you're in puts, and you watch this, really important, whenever you're in puts and the stock continues to drop and your puts aren't going up. Next, right here, SMCI low puts 55 now. Okay. Surprised they didn't take NVIDIA down. I'm also surprised on that conference call they didn't talk about NVIDIA. Those puts went to $63. We did exceptionally well with those, obviously. SMCI short puts and stock trimmed here. You'll see that in a minute, down to a third. But if we break, we're going to 357, which is actually where my target was. Obviously, we didn't get there. I didn't think it could hold. I thought it was going to keep falling. Obviously, I was wrong. Now, while this is going on, let's blow this bad boy up. What I'm doing is not only looking for demarcation lines, but I'm looking for signs of any kind of bounce. And if I don't see it, there's a couple things that I can do as a trader. For example, with the puts that I did, once I started dropping, I actually closed one set of puts and put another one on. And the reason that I did that was to lock in the gain and then utilize a percentage of that gain for my risk. And that's a really important concept, because once you start doing things like that, you're mitigating your risk. Here we started to see that those options start fading. And once they're doing, we're pulling money out of the new set of options. I'll show you the timestamps in a second. But at the same time, I'm looking here and going, okay, this is a reversal right here, and we're not breaking. And because we're not breaking, it's getting to that point where, what am I trying to do? I'm towards the tail end of this thing. Do I want to stay in it? Do I not? I pull out, and then I just set a level and saying, okay, if I get above this, I'm gone. In the meantime, while I'm doing those other puts based upon this break, I'm thinking out loud that, okay, because I talk while we're trading, all right, I think we can go even lower. I want the leverage there because this could get even better as a trade. And obviously there's no other way to say it. This was just a monster trade for us. But the important part about this is all the steps. Because once you have all the steps done, that's when it all comes together. When you understand what it is. See, what you don't want to do with trades like this, and this is where I'm going to leave it, you don't want to put yourself in a position with these where you're scaling out, okay? And then you're trying to get back in. Scaling out, oh, I'm trying to get back in the trade. No, you put one trade on and then you scale out at specific stock spots. And here's the bottom line. You never know where it's going to end, okay? There's no perfect indicator. There's no perfect exit. All you're trying to do as a trader all the time is optimized. And this is really important for people to get that concept. I can have my own beliefs, but I'm going to trade what's in front of me. And this is just the last tag from John that I want to show. And I also want to go through this concept. You don't need to be doing 10, 20 trades a day. What you should be doing is you should be looking and focused. I'm active. People think that it's aggressive, and because I am an active trader. It's hyper focus on one specific thing that I think is going on. And then after that thing either works or doesn't work, then I just move on to the next thing. And I will have multiple things going on at once, but that's after something else is already working. I can go through that at a later time, but I think that's really important for people to get. So please comment on this. The comments I've gotten on this kind of stuff are mixed, where people are like, show more of these kinds of things, and other people saying, I fast forward through this part. The more comments I get, the better. I've talked to a couple of people that I actually work with, and I'm going to start showing how they're incorporating these strategies themselves. So a couple people have agreed to let me start showing what they're doing with what I'm teaching them. I think that might be more helpful as well. So your comments on this part are really appreciated. Now, Friday at the close, they came out and issued a statement saying, no material effect on earnings. Is that possible? Yeah, it's possible that someone looked at their book and said, no, you don't have a restatement problem, but this should have been categorized that way. And considering the scrutiny that you're under right now, you should recategorize this. That is very possible that that's what happened there. I don't have an answer for you. I don't know how it's going to play out. I would not be overly comfortable being short with the statement they issued on Friday and the way that they issued it, especially with the scrutiny they're under. For them to come out and say no material restatement is a big statement, because if there is, now they've set people up and they've opened themselves up to liability via, a civil action from a class action lawsuit for saying something like that. It's a problem. So I'm very surprised that they did that. They already did open themselves up, but that would be just another huge can of worms. Now, it doesn't mean you don't trade these names. You do. Okay, but when you see names like NVIDIA crush, and I'll show you this in a moment, but when you see names like NVIDIA crush, I'm going to clean this off for a second, and then they don't go higher, and it did crush. Maybe it didn't crush as high as everybody wanted to, but it still beat, okay? It's still beating, and it's still doing exceptionally well, and I've got this huge DTL that's building. The question with DTLs like this is you just don't know when they're going to, and I'm not going to equate it to this company because I don't like this company that much, and people know that, but I don't like it now. But I liked it for a long time. But I just want to show you something. 1, 2, 3. Oh, it can't get any worse. 1, 2, 3. Okay, I'm a pattern trader, guys. When I say it, I say it. I'm long this. I have no intent in doing anything with it. But you have to understand that these patterns exist for a reason, because the patterns are human behavior. And what we're seeing right now is lower highs. And we have to respect them. So the major trend right now is to build this DTL. Okay, it's not once, not twice, but 7, 8 times. And now you're at a position here where, okay, you're breaking, and you're breaking the 55. And it's not great. And now you're wedged in here. Now, does that hold? Does it break? No one knows yet, but I don't buy stocks for anything more than day trades that are doing that. There's been a statement that Goldman's had for a period of time here. As goes NVIDIA, goes the NASDAQ. How's the NASDAQ going? Not too great, right? Now, what happened on Friday is kind of interesting, because you got above that 55 here. If I drop that in, you did get above that for a second here. And I think that's important to just note that you are above it. But what's more important to me is, what do we do? I think you need to start looking at the next group of who are going to be the leaders. And I think you're starting to see that. And I'm trying to show you what the data is also suggesting. And I do think that they're going to be interest rate related. So we started this about a month ago. Actually, right after earnings, we started this because the earnings were great. And then they were talking about how the interest rates and everything's going to affect their business. And you're seeing it with names like UPST. I think we're in the mid 30s. You're getting to this level at 46. Take a look at this on the weekly and how you're getting up to this area and you're rejecting. Now, obviously, if you start getting under that, 41 Probably not going to feel, really rosy about it, but I do want to watch this here, and I do think that there's something to pay attention to. Another one that's in this space that absolutely unequivocally crushed is Affirm. I'm not a fan of the company at all, and it doesn't really matter, what I like, what I don't like. But when you start to look at these names, I think that this is really poignant. Now, and I do think there is a tech space, and we're going to discuss that in 1 second too. I'm just going to at least get the idea out there and then cover it probably on Tuesday for you. But if you look at this, and you start understanding what they're saying and what they said on the call, it was like, once interest rates come down and they're lending at the same rate, if you're borrowing at 10% and you're lending it back out at 20, you know what you're making 10%. But if you can borrow at 5% just to make it simple, and then you're lending at 20, you're making 15% or a third more money. I'm just going to make the math simple there. It became very clear that they raised guidance and that they have way more gas in the tank. And you saw that, and you're seeing that in the movement. It's a very different kind of movement now in Affirm. These kinds of trades, I think people need to really start paying attention to this. The Rocket Mortgages of the world, the Lending Trees of the world. I think that these kinds of names could start really outperforming. I think that that's really something out there. And I want to differentiate something, and I want to just leave you with this thought. There are two ways to look at AI. Okay, everyone is looking at AI on a business perspective and saying to themselves, okay, how, on the business perspective of AI, what is Meta doing by spending all this money? And this is the business AI side. Okay, they're spending all this money. Amazon, all these companies are spending all this money. Has anybody need to spend that money? Has anybody given the idea that they must spend just to maintain revenue? Not even increase revenue, but just to maintain their dominance. Right? Everyone keeps asking this question of, well, they keep spending. Well, maybe they need to spend to maintain the revenue, not to even increase the revenue. I think people are missing that aspect of it. But let's just take this out and understand that there's a consumer AI. Now, is the consumer AI side with the iPhone and the Dell computers and all of that, is that going to be big, or is it going to be like that silly little paperclip that we all had to deal with Microsoft till we could finally get rid of Clippy, right? We don't have an answer to that yet, but Apple just came out and said that they're going to raise their phone sales, projected phone sales by over 10%. And Dell's actual call was that they are just beginning, I'll clean all this off, that they are just beginning their new cycle. Now, I thought that was interesting, and I thought this move was interesting too. So if you take a look here, what I always like to do with these kinds of drop a level right here so I can just kind of see what's going on, right? I like looking at the anchored VWAPs, of very specific pain points. And of course, these are pain points because this is where somebody bought and they're still in, and then you try to see where at that spot. And what you're going to see here, let's grab this and just drag this up here so it makes my life a little easier. And what you're going to see here is if you look at that break, that control bar right in here, okay, you were starting to lift over that level. And I think that's important. I think there's something very important there. But if we clean all this off and then go, okay, well, where's the last pain point here out of all of them? Well, it'd be that wick, right? That'd be the highest spot that you have. That's the last pain point. You'll note that you just got above that. Now I have the control bar here. And if we do this, like take a look at this, it's important to get this. So this is when we broke down. Since you broke down, all these people are up. And then since you've been in a position from here through here, those people are still down and were until Friday.